Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about GUSH, and that is traded on the New York Stock Exchange. This is a leveraged ETF. I primarily use GUSH as a trading vehicle, not as a long-term hold, so I am planning on utilizing this as a swing trade. This is a fund that tracks the prices or the movement rates of companies that are very highly associated with or correlated with oil prices. So I've got it set to the portfolio right here. You can see some of their top 10 holdings right here. They're actually relatively cash heavy at this point in time. However, they are tied directly again to a number of companies that track the energy sector, primarily oil. What I'm really looking for here is this is a leveraged fund. So oftentimes, as you can see right here, it continues to have a lot of volatility. And a lot of that is due to the leveraged nature of the fund. So as oil prices go up or down, then this is going to be moving associated with it. Over the past year, you can see that it has had quite a bit of moves, going down from below $60 a share to north of $120 a share. What I'm looking at for right now is a move back up to north of $105 a share. Right now, the current price is about $95 a share. And so if that move were to happen, it would be more than a 10% return. Some of the reasons why I'm looking for that particular move is because I believe that as we continue to see the world come back online as somewhat of a reopening play, that oil prices will continue to grow as demand continues to increase. But the other half of that equation is there have been severe limitations on supply and the continued rebuilding of strategic reserves around the world. And both of those items are going to heavily drive additional consumer prices as that demand increases again from some of those large scale buyers. There's also a number of concerns in the Middle East from a geopolitical perspective, in which case that area of the world likes to significantly, or they are primarily the ones pricing the market with OPEC Plus. And as such, there is a lot of concerns and hostility in that particular area of the world at this point in time. And as such, I'm willing to hold on to oil as my leveraged bet, as I believe that prices will go up at this point in time. Again, this is a fund that has a lot of volatility. So a down day in oil prices like we saw on Friday will see the fund drop pretty dramatically. As such, it's important to watch that going forward. But I do think that there's a lot of volatility in the fund that we can play. So it does have a relatively high expense ratio, which is one of the reasons why I don't like to hold it very long. You can see it's north of 1%. That being said, it is something that is great if you're looking to play some of these macroeconomic moves that are primarily coming from West Texas intermediate oil prices, which is what I primarily track. So if you want to learn more about it, you can check it out. I'm using TD Ameritrade here on the website, but you can obviously Google GUSH. I have a number of videos on the fund. I just wanted to highlight that I think now is about the time where you can start nibbling. And if it continues to drop, then that's when you continue to buy in. Again, you just need to be looking for what the expectations are associated with forward-looking pricing, because right now the whole market is under a bit of a pain point, and as such, you need to continue to watch it so that you don't get caught holding the bag if it does continue to fall. But oil prices have a lot more to watch and to look at in terms of macroeconomics than pure stock valuations. And that's why I'm making this play. So if you have any questions, let me know in the comment section down below or in the Discord, which is linked in the description. And if you made it this far, thanks for watching. Please leave a like and subscribe. Thanks.